Hi folks, it's Doc's Market Minute for Tuesday, January 19th. What I'm looking at here is my gap chart of the S&P futures. Again, this is the chart of the S&P futures, which trades, about 23 hours a day. However, what I'm only looking at here is the section of time which is represented by the cash market from 9:30 in the morning a.m. Eastern Time to 4:15 p.m. Eastern Time. So I'm just looking at the day session, and what it shows me are the gaps. It becomes very evident where the market's trading outside, and these windows or gaps are often targets that the market sets. In a sea of sand, one single flag that sticks up becomes a target for the market to go after, and it can become relentless until those gaps are closed for no apparent reason other than it's just a target out there. So all of the green lines here are the former gaps that have now been closed as of Friday. And so we've closed every gap that we've created since the move in late August, with the exception of some of the upside gaps, which are now shown in blue. So we've left a trail of tears behind us on the way down, and so those gaps will eventually probably get closed. I don't want to assign any kind of certainty to any gap whatsoever. We still have some from way back when in 2009 that have not been closed, and who knows if those will ever be closed, right? So there's no certainty in terms of actually closing gaps, but in the short term, something that's close becomes a target. Now, if we go back before this level, we do see some gaps that are down here around the October 2014 time frame, and then there's some before that that we can see here in, this is early 2014. So there's some early 2014 gaps that are around here that we can see. That, so the biggest one is right here around the 1800 level, and so that's obviously a big target. I don't believe that we're going to see that until the second wave down, but anything could happen. Anything could happen. A lot of times the actual bottom comes on one of these horrible capitulation moves, not unlike what we saw 8 years ago, literally to the day, when we had the Societe Generale trade that went bad over in Europe and created a huge market limit down effect as we got into Martin Luther King Day. So we'll probably get some type of a bottom here soon enough, as soon as one of two things happen. Either we get a piece of bad news that completely comes in out of left field and is just too much for people to handle, causing a massive capitulation and a retest of the futures bottom in August. All right, so this one is way down there at about 1814 on the ES, and so that would be one heck of a move. And right now, as I type this, that would be about 80 points below where we are today. That would most certainly cause some type of capitulation bottom, especially if we undercut that. And then eventually at some point we're going to see a relief rally up to this point. And from what we're seeing with the rest of the market, even if it does come up as far as this far and bounces around for a while, I think that might be it for a while. I think we'll eventually roll over again. I think 2016 is probably going to be a very difficult year if we see how the markets are being led right now by the transports and by the small caps. So in the short term, what we can see is some of these upside gaps become a target, and then we'll see whether or not these ones eventually get in the picture down the road. It may be a while before we come and close those gaps again. That's it for today's Market Minute. Thanks for listening. We'll see you tomorrow.